Hi, I'm Mike Jacobson with Tune Investments. This week, I'm going to talk about 5 reasons why real estate is the ideal investment. Several years ago, wife and I were returning from a vacation, and she decides to check her stock. She had a lot of money in the 401k, and she wanted to check it, and the stock had dropped from $60 a share down to about $35. And you talk about a buzzkill, that just kind of spoiled the mood on the way home from a nice vacation, because she was heavily invested in that 401k. Have you ever experienced this kind of volatility with an investment where it just drops in value like that? Or have you ever been concerned about losing all your gains and possibly some of the principal? How do you deal with this kind of risk? So many investors over time have chosen to invest in real estate as opposed to just the stock market. Some of them chose just real estate, some choose to do some of both. So I like to think of real estate as the ideal investment. There are components of income, depreciation, equity buildup, amortization, and leverage. So the first letters of those 5 words spell ideal. So let's first talk about income. Real estate can provide a reliable income. We're talking about net income after the taxes, insurance, management, utilities, repairs are paid for. It also needs to cover the mortgage. So remember that income is taxed at ordinary income tax rates, and there are ways to increase that income as well. We can increase it through property improvements. Maybe make take for example, a C-class apartment building and turn it into a B-class through just making it nicer. Might be cleaning up the outside. Sometimes it might be renovating a house that was in foreclosure, but you can increase the income by making the property improvements. Then you can also reduce the expenses. Can you fight the property taxes? Maybe you can find a cheaper insurance. It might come through more efficient property management. So there are ways to increase the income and reduce the expenses. And with a commercial property, the net income, well, all properties, you should be able to increase the net income with inflation. So as the rents go up, the mortgage will remain constant. So this allows the net income to outpace inflation. The next of the 5 is depreciation, and this is a tax reduction strategy that the IRS allows us. And this is how we account for wear and tear on the buildings each year. For residential properties, you can depreciate over 27 and a half years. As for the straight line depreciation, you can also do what's called accelerated depreciation. If you do a cost segregation analysis, then you can break that up and achieve a faster depreciation, writing off more against your taxes. And since taxes are your second greatest threat to your wealth, you really want to be able to offset and reduce those taxes where you can. And the depreciation can be used to offset the income not only from that property, but sometimes other income you may have as well. And this is one of the benefits of real estate you don't have in stocks and bonds. The next of the 5 is equity, and that is the value of the property less the mortgages and liens. So it can be created, and it might be that, or you can buy the property at a discount. So for example, a distressed seller may be willing to sell the property quickly, so you're able to get it at a good price, but it's really worth more. There's also times where you can make improvements to a property to bring the value up. We call this forced appreciation. And this brings, this increases your equity. In the single-family home market, the values are driven by your local market. Your realtor can pull up other properties that are sold and compare those on the MLS. And those are what drive the value of your house. If you ever look to list your house for sale, you can see what other houses in the neighborhood are selling for. That's what you're going to be pretty much limited by if you're trying to sell a house. Within multifamily, the values are driven more by what we call capitalization rates, or the cap rate, and net income. So if you can increase your net income, then at a given market cap rate, you will increase the value of the property. So within multifamily and commercial properties, there is more opportunity to create additional equity. So how much opportunity do you have to create equity in other investments, such as stocks and bonds? This is one of the things I really like about real estate. And there's another thing we can do also. If you have equity in real estate, and remember, like in Monopoly, you can trade in houses. What happens when you want to trade up in a property? You trade in your houses and buy a hotel. You do not have to sell those houses and individually at a loss. You're able to just convert the gains, and that's called a 1031 exchange, where we're allowed to do that. Next is amortization. So this is where we increase the equity when the loan payments are made. So as the tenants pay the rent goes to pay off the mortgage, and we apply that mortgage to principal and interest. That reduction in principal reduces the balance on the loan, and that's how we amortize the loan and get additional equity in the property. And that benefit's not available for most other investments. And number 5 is leverage. This is the feature that really makes real estate powerful. You don't need $100,000 to invest to buy a $100,000 property. You can usually get it with, for example, 20 to 30% down. Creative financing might make it even more leveraged. You can enjoy gains on a $100,000 asset with only $25,000 invested. So, for example, you want to buy when you buy a $100,000 house, and it can increase in value to $125,000, and you're able to do that with a $75,000 loan and only $25,000 down. Well, what happens in several years? Now the property is worth $125,000. Your $25,000 has doubled, and that's 100% gain over time. We can do the same thing with commercial properties. So in conclusion, I really like the 5 attributes that make real estate the ideal investment. We said that was income, depreciation, equity buildup, amortization, and leverage. And so it's hard to optimize all 5 at once, but you combine all 5 of these together, and that really does help you to produce superior returns. And I have to admit, after that vacation, we did choose to sell some of the stocks over time and invest more in real estate, and are really glad we did. And we hope that you've enjoyed this, help you discover the 5 ways that really makes real estate the ideal investment, and look forward to seeing you again. Thanks.